The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, this is Elena Hayes and I'm in the Hopkins Homewood Career Center. I know we have folks joining us today from both Cary as well as Homewood, so we welcome everyone. We have an awesome alum today who is going to present some really valuable information on preparing for upcoming super days and the opportunity to just really make sure that you're prepared and confident and ready to go for any potential interviews that you might have in the area of finance. So today we have Tim McCarty. He is a 2012 grad of JHU and a 2015 grad of Cary Business School. He's currently at JP Morgan and has held positions and done work in equity research, investment banking, and asset management. He can answer a wealth of questions, and we'll turn it over to Tim. One thing I will say, if everyone who's on the webinar, if you have the ability to just type in the chat box if you have an upcoming super day that you are going to be doing, if you could type what division you'll be working in or what you're interviewing for on the in the chat box, and then that way I can let Tim know and we can make sure that you hear specifically what you need to focus in that area. So with that, Tim, if you want to go ahead and jump in.
Great. Thanks, Elena, and thanks everyone for joining today. As Elena said, my name is Tim McCarty. Currently work at JP Morgan in the private bank, and what I thought would be the most useful, I want to make this as interactive and as helpful to everyone online as possible. Thought I'd give a quick introduction about myself, and then go into different areas. As Elena said, I've had the opportunity to work in different areas of finance, so I think I have a good idea on what questions are most likely going to be asked. Maybe like a quick investment banking, what I would expect, quick equity research, and quick sales and trading asset management. And then what I really want to do is open it up to specific questions, because I was in your shoes many times. We're all trying to learn, and I had to fail in a couple interviews, my story, before I succeeded, just simply because I didn't know what questions were going to be asked. So I want to make it a goal that everyone who's online doesn't have the problem I ran into, and I want to be as helpful as possible to anyone. There's no such thing as a bad question, and I really want to make it as interactive as possible. So to begin, as Lana said, I graduated Hopkins in 2012, and I really have the unconventional background to finance. I was in the pre-med program. I also had an econ degree, but I always thought I was going to go to med school. I was the captain of the basketball team at Hopkins. And it was late in my junior year I decided to transition into finance for a multitude of reasons. But, I had a strong GPA, had a strong resume, so I was able to get interviews, but wasn't able to succeed right in the beginning because, as I said, I wasn't really prepared and didn't know what questions were coming. So my goal is to make sure all Hopkins students are as prepared as possible to succeed. So I started my career in Stifel investment banking in Baltimore, then had the opportunity to join a buy-side hedge fund in the Baltimore area. Went to Cary to get my MBA, which I did the CFA as well, completed all 3 levels of the CFA, and then I've been at JP Morgan for over 2.25 years post-business school in the private bank, but I'm currently transitioning to a buy-side equity research role covering the healthcare sector. So I think what would be most helpful in the beginning is going over, taking some, and I think Elena said some people are going to type in the chat what areas people's super days are going to be in, because I want to tailor it to that. But I prepared quick 5-minute sessions on investment banking, on asset management and sales and trading, on equity research that I think would be a good start. And then I want to jump right into questions, if that sounds okay. Before I proceed, does anyone have any questions, or if you want to type into the chat now? I'm not sure if I can see it on my end. and maybe Elena.
Yeah, I can see it.
Yeah, you could say if what people want to necessarily focus on, because I want to make sure this is as impactful as possible. So if no one's interviewing for equity research, we might as well, we can talk about the, because there are maybe some people joining late, but we want to focus most on what people are interviewing in the next couple of weeks. Do you mind, I don't know if I can see it on my end, do you mind reading to me?
Sure. So again, guys, if you have a question, you can either raise your hand on the webinar screen, or feel free to type it into the chat box. Also, if you have an upcoming interview that you're preparing for in an area that you want Tim to focus on, feel free to type that in the chat box as well, so we can make sure to get your questions answered. But if you do have a question at any point, go ahead and raise your hand. It looks like, Cecilia, you have a question, so I'm going to go ahead and unmute you, and you can ask your question. Go ahead. Cecilia, did you have a question? You're unmuted. Cecilia? Okay, I can't hear you. Cecilia, did you have a question? Okay, I will move on to, if you have another one, just raise your hand.
And if there are no questions, Elaine, I can get right into it.
Go ahead. Yeah, just go ahead. I thought that there was a question raised, so go ahead.
And then maybe, I don't know if they can type it in, but all right, so I think I'll just start.
Oh, here we go. I'm sorry. My fault. Okay, so there's a super day. Alyssa's preparing for a super day at Wells Fargo for investment banking. We have questions on equity research as well. So if you want to maybe start with focusing on those two, that'd be great.
Perfect. So I'll start with investment banking because that's what a lot of people go into right out of college, including myself. And those are actually, in my humble opinion, the easiest interviews to crack because there's only a limited amount of questions they really ask, especially coming from undergraduates. Can you still hear me, Elena?
Yes.
All right. My computer just went a little weird on my end. All right. And if at any point you don't hear me, just let me know. So investment banking, I would divide the questions into behavioral, which I would argue being on the side that's interviewed people may be the most important for undergrads, and then technical questions. So the behavioral questions are going to be simple, such as like they'll start with walk me through your resume. And as per maybe the first part is super day, you'll probably be asked to interview 7 30-minute sessions. They're very tiring. Some will be more behavioral based with senior people. There'll be one probably technical room. They want to see how you do in uncomfortable positions. So my biggest advice would be to obviously prepare, but there's inevitably going to be in that long of a time a question that you don't know. And they probably do that on purpose. So my advice would be not to BS anybody, and admit what you know and don't know. That shows a sign of confidence, but then use what you do know to try and answer a question. So the behavioral questions will start with your resume, but the 3 most important behavioral questions probably in an investment banking interview will be, why do you want to do investment banking? Why are you interested in our firm? And why should we hire you? So the first one, I think a good answer in investment banking is first showing the interviewer. You'd be surprised how many people, when I was on the investment banking front, would say, I want to do investment banking. And then you'd say, what is investment banking? And people would be interviewing for investment banking without even knowing what they'd be doing. So I think part of that answer is articulating to an interviewer that you know what you're getting into. Something to the extent of, I want to go into investment banking because it provides me with a broad skill set, and what I'll be doing on a daily basis is different, challenging, and not monotonous. For example, one day I may be building an Excel model, valuing a company using a fundamental discounted cash flow model. The next day I may be using comparable company analysis to value that same company, and then building a PowerPoint presentation, and then putting valuations on a football field and spreading comps, and then building an information book, just showing the interviewer that you know exactly what you're getting into. The second question is, why our firm? And you'd be surprised, so many people, and this is especially important for, I think I heard someone say Wells Fargo, or especially the boutique investment banks. So many people don't do the research ahead of time on that specific firm, and I can't emphasize enough how important it is, because if you do the research on a specific firm, you can really stand out. And where you can really stand out is in the part at the end. They normally talk to you for 25 minutes, and you want it to be conversational. But the 5 minutes, they give you a chance to ask questions, and you could ask a question like, oh, give me an example of your background, and that's fine, nothing wrong with that. But if you do your research and say, hey, I saw a deal that you did was this, can you give me the strategic rationale of that? Or I saw you were divesting this business, tell me a little bit more about that. I saw your CEO was quoted on his recent earnings call saying this. Which, one, they're more sophisticated questions, and you can impress somebody and stand out from the crowd. But more importantly, you are showing to them that you put the effort that you really want to work for that company. So that, I think, is a really important distinction. And then finally, why should we hire you? That's just talking about your story, and that's going to be very individualistic. So the behavioral questions will be very important, because especially coming from undergrad or a more junior position, they're not expecting you to be a managing director. They're not expecting you to come in and be the top of the food chain. They're expecting you to just be a fast learner, someone who's got a great attitude and who's going to show up and block and tackle each and every day. So you're not expected to have all the answers. I'm not expected at my level to have all the answers, and that's okay. But it's important to stress that. So moving on, so the behavioral questions are a little bit harder in this environment, because everyone's going to have their own story, but be expected for, give me an example of a time you're a leader. Give me an example of a time you were a follower, because so many people want to talk about times where they've led, but how many times, especially being on the bottom of the food chain now, being an analyst or a summer analyst, an intern, which you're trying to secure a spot for, you want to show that you can work in teams. Give me an example of a time that you've worked in teams. Give me an example of a time you failed and what you learned from that experience. But the funny thing about equity research, and we'll get to equity research later on, is that even the best research analysts fail 45% of the time. They're right about 55% of the time, and that's what makes it good. So you have these people that have had top degrees at very high quality schools such as Hopkins and have never failed before, and then go into an industry where you're going to fail. So people want to hear about times where you've fallen and gotten back up. It's going to be hard to cover those in an environment, in a panel environment such as this, because each and every one of your stories is going to be different, and you will undoubtedly know more about yourself, where you can tailor your answers to those specific questions. I think moving on, what's a lot more coachable in an environment like this are the technical questions. So the technical questions, and this is an overlap with investment banking and equity research, I would say anywhere between valuation questions, accounting questions. You may get a couple brain teasers, but they're sort of hard to prepare for. So I'll start with a couple common valuation questions. And the common valuation questions you'll get are, walk me through a discounted cash flow statement model. Walk me through, what are the three main ways to value a company? And what are the advantages and disadvantages of each of those? So I'm trying to think, what are some others that, and there'll be follow-up questions off of those, like what's the difference between, so maybe I'll just start with how I'd answer just a couple of those, and then we can, in the Q&A, if we want to go more in depth, please do so. So I think if you're in investment banking or equity research, a guaranteed question is going to be, walk me through a discounted cash flow statement. And you want to make sure your answer is enthusiastic, but also succinct at the same time. So I think a typical answer may be, All right. You always start with the bottom line up front and then go with a couple of details. I would say a sufficient answer would be something like this. A discounted cash flow statement is an intrinsic way to value a company based on the present value of its free cash flows. It starts first by looking at a company's financial statements and then getting to what's called unlevered free cash flow. And I can get to unlevered free cash flow by taking a company's EBIT, their operating profit, subtracting out taxes, subtracting plus depreciation and amortization, less CapEx, less changes in working capital. Once you get to unlevered free cash flow, you project cash flows out for a certain time period where you have confidence that your projections are going to be reasonable. And then, but you have to discount those cash flows back to a certain point. And to do that, you need the weighted average cost of capital. And the weighted average cost of capital formula is the percentage of equity times the cost of equity, the percentage of debt times the cost of debt, and if there's preferred stock, the percentage of preferred times the cost of preferred. The second step is then that's evaluating the value of the company where you can reasonably project out. But valuation, to get an enterprise value, assumes the company goes on forever. So to do that, we have to also value what's called a terminal value. And the terminal value values the part where that goes beyond where you can reasonably project. And there's two ways to do that. You can do a multiple method where you take comparable companies and look at their average multiples and adjust based on if you think your company deserves a higher or lower multiple, etc., and then discount that terminal value back to the current. Or use what's called a Gordon growth method approach, which basically takes the free cash flow in the year where you stop projecting, assume a terminal growth rate, and then discount that back over the discount, all over R, the discount rate minus the growth rate, and then discount that back. So I know I threw a lot out. And like I said, I don't know the background of everybody who's on the webinar or not. So if we have any questions, please unmute yourself and let me know if you want to go in any more detail. If I said a term that you didn't know, it's very important now that everyone understands certain terms. And if I said something you didn't understand, I'd be more than happy to elaborate. If not, I'll move on to another common question.
Tim, we do have a question that was typed in. The question was, why did you choose JP Morgan in the first place? Why does JP Morgan attract to you? What does JP Morgan attract to you?
Yeah, it's a good question. I mean, I chose JP Morgan for obviously the reputation, first class bank. And I would say for a lot of people in your shoes, I would recommend going to a bigger bank right out of college or business school just because of the training that's available at these firms, the mobility. I'm the perfect example of that with my current new role that I'm going to be in equity research. The leadership, and just look at JP Morgan's stock and how it's done, just the first class balance sheet, the diversity of different roles and people within a firm like that. Elena, what was the second part of the question? Why did I choose JP Morgan and
what attracted you? I think you kind of shared some of that already.
Okay.
Mm-hmm.
Yeah. So, and if anyone wants to talk more about my story, I'd be more than happy to do so. But I want to make sure this is as impactful as possible for the students. So I guess I'll move on. So I hit the DCF question. If I said anything, please interrupt me. I want this to be as interactive as possible. Another example that would be, so then they
I have one more question, Tim, if you want to ask them. How did you learn and prepare to answer all the technical questions when you didn't directly study finance or accounting in college?
Yeah, it's a great question. And I did it the hard way is I literally took interviews, failed, wrote down questions, and then asked people in the industry how you would answer them, and sort of had my own interview bank, and then eventually passed. But that's why I'm trying to volunteer my time today to give people what I think are the most likely questions in an interview and how I'd answer a couple of those, just so to prevent everybody else in the Hopkins community from doing all of that groundwork that I did. And I think it's an important question. Everybody here at Hopkins I mean, that's why I'm here today. Hopkins is a very team-oriented school, and everyone likes to give back and help each other. It's not a very cutthroat culture, unlike some colleges. We have a very close-knit alumni base. Everyone wants to help each other. And my advice to everybody who's on today is to use your classmates. Everybody, the juniors, I don't know if we have juniors, sophomores, seniors, connect with each other. Start a interview bank of questions. And then I think I heard one person's going to Wells Fargo next week. One person's going to, when you all get to your super days, mock interview each other. And then when you get back, ask each other what questions they were asked and how they answered them, and ask for feedback. And then eventually you'll grow because you all will be going to hundreds of different firms. That will scale very quickly. And you'll have an interview bank of questions that'll be thousands of questions. But the key is use each other, interview each other, ask each other for feedback. How would you answer this? And then when your friends and colleagues go on interviews, ask them what went well, what they were not prepared for. Because odds are, if your friend got that question, you're going to get it in a week. So that is very important. Find interviewing buddies, and the more you can scale and use a team approach to that, the better everyone's going to be. Moving on to another question.
I have a few more too, Tim, if you want me to share those.
Yeah, go ahead. I want to make this as interactive as possible.
Okay, the next question is, I'm currently preparing for an interview for JPM Asset Management Department. Can you give some advice on that?
Yeah, we'll get into the asset management. Can be a very broad topic. There's the private bank, there's investment management. Those, I would say the asset management interviews are a hybrid between equity research and sales and trading interviews, market space. So, stay on the line. But generally, I think in asset management interviews, and this goes in all interviews, maybe a little less so in investment banking, but you are going to be asked questions for current events, knowing what the market is doing. Typical questions that I think are fair game is, what is your view of the stock market right now? Where do you like to invest? Europe, the United States, or emerging markets, and why? What is your view of the bond market between interest rates and credit? What is your view on what the Federal Reserve is going to do over the next couple of weeks? Very current market focused questions, and anything would be fair game. Give an example of a merger that you read about in the news. What's the IPO market doing? Pitching a stock is a fair game. So asset management, I think, more than all else, and it's similar to sales and trading, but maybe more with a higher detailed answer, questions such as those. What sector of the market do you like? It's one thing to say, what is your view of the stock market? A follow-up question is like, all right, healthcare versus industrial, which one? Consumer discretionary versus consumer staples, which one? That I think is are all fair questions. Next, Elena, do you have another one?
Yes, I have a few more. When asked about walking through DCF, should we spend more time talking about the actual calculations or focus on projections or different scenarios for the type of company?
I would say keep it. My sample answer, and I just made that one up on the stop, may have been too long. If the interviewer is testing, remember, it's an undergrad interview. So if the interview wants more, they will ask for more. I think one way it could go a little south is that you try and give too much information. If they want to get more out of you, they will ask. So I think it's important to try and keep your answers 1 to 2 minute max, because you want it to be conversational. You don't want to feel like you're just talking at somebody.
Great. Next question. What course do you think is most helpful when applying for your job, and how did networking help you when applying?
The question is, I'm guessing from an undergrad student. It's a little different now, but I thought I took Dr. Steve Hankey's equity research course, because in that course, you're literally given a public company week, modeling it, and then trying to pitch it to other students within the firm, and you learn about drivers, companies, industries, competitive position within an industry. But all of the econ and accounting courses are very strong and should set you up well. But I think it's important to emphasize that the coursework in and of itself is not, that's half the battle, but then tailoring it, you still have to do your preparation. Like researching the firm that you want to go to, having specific questions about that specific firm, current events, like the person that just asked about asset management. You may know how to walk somebody through a DCF, but if you can't answer the question, what do you think is more expensive right now, the fixed income or the equity markets? That's going to be a problem. So applying it and reading in current events and having an idea what has gone on in the markets over the past year or two and where you think we're heading. One caveat to that is have a view, try and support it by fact, but know it's just a view and it's opinion. You're not expected to have a Nobel Prize view, but as long as you have one thing you can't is not have a view. I hope that answered that question.
Great. What questions about the general economy should we be prepared for investment banking? What are the most important things to talk about when they say, so tell me what's going on in the markets?
Yeah, so tell me what's going on in the markets is a little bit of a broad question. You can take that anywhere. A good interviewer would probably ask you a more succinct question. Anything is fair game in investment banking. They may do like a machine gun and say, what's the S&P at? What's the 10-year at? What's gold at? What's oil at? Those are very, what I call level one questions, because all you have to do is Google them then the night before. Common question is, what is our company stock price at? I would say the second level questions, though, especially for investment banking, any of those are fair game, what I just said, but common questions are, give me an example of a stock that you like, and then investment banking related questions. Give me an example of a merger that has happened. There's a common one is obviously the Whole Foods Amazon one. Anyone can Google about that if they are really at a loss. What's your view of the IPO market? People should generally know that IPOs are a little bit down in terms of volume this year, just because a lot of the uncertainty from Washington. What's your view of the M&A market right now? All else equal, people should know that interest rates are still low, so companies can borrow to fund acquisitions at a good rate, but at the same time, equity multiples are above their historical averages, so valuations may be a little stretched. So you have that give and take. Debt side, you can borrow cheaply, but if there's nothing cheap to buy, and being a little bit late in the cycle, companies are going to be, you have organic growth, which is how I would define it as companies generating on their own capabilities, but being in the 8th to 9th year of a bull market, companies may be looking for ways to grow in addition to organic growth, such as buying another company. So that would be something I would touch on. So IPO market, give an example of a merger, pitch a stock, and then what's your view of the M&A market. Those would probably be the 4 questions that I would prepare for in terms of current events for investment banking. For asset management, it's a much larger pool to draw from. It's probably going to be more open-ended in having a view and with the questions that I just talked about in the past.
Great. Another question. What recommendations would you give to sophomores who want to pursue a career in finance? How important do you think math is in your daily life?
Well, first, being a sophomore, it's funny, I'm on the Hopkins Finance Mentoring Committee too. As you know, just knowing that what you want to do as a sophomore, you're ahead of the game. I didn't switch into finance until late in my junior year, so I think my story is good for everybody listening, that the people who are late, believe in yourself. If I can do it, you can do it. And for the people that are early, it's like you have a huge head start on people like myself that were late to the game. And by just participating in events such as this and practicing with each other, I can't stress enough the community aspect of it. Getting together with friends, whether it be upperclassmen. If I was a sophomore, I would, in addition to the coursework, I would be connecting with other sophomores wanting to go into finance, juniors who are going through the interview process, seniors that already have offers and are interviewing, because they are going to be a wealth of information, and they're going to be able to tell you what questions you had. You can mock interview them, they'll mock interview you, and then sharing and cross-pollination is really an advantage for everyone to take advantage of. And what was the second part of the question, Elena?
The second part was, how important do you think math is in your daily life?
Math is important, but it's not super important. Like I took AP Calculus BC in high school and haven't used any calculus in my job. So, but obviously more math major, the smarter you are, the better. But if you're not good at math, that should not be a deterrent to enter the industry.
Great. Next question. I was recently asked during a phone interview for D.E. Shaw, how do my views about a certain stock, in my case it was Alibaba, compare to those on the street? This question stumped me since I didn't know how to approach it. How would you recommend answering this?
Yeah, that's going to be that. I'm surprised they asked that to a college student. So they gave you a random stock, one that's sort of well known, and asked for those views on the street. When you get a question like that, I think you first take a deep breath, and like I said, they know they're giving you a question that you're not expected to answer. But I would take a company and go through what I think if you know the company at all. So let's say somebody gives you a question and gives you a company you've never even heard of. Then I think it's fair to ask the interviewer, what does that company do? So if you weren't familiar with Alibaba, I could say, can you please explain to me? I think this is what they do, but just to confirm, like, let's just pick a random company. Like, let's pick General Motors, for example. What does General Motors do? They sell cars, right? So if you got that question on General Motors, you may want to say, all right, well, General Motors is a car company, and I think you have to say, like, hey, I haven't modeled the company. This question obviously is the first time I've really thought of the stock, but I would think about how the company, where we are in the economic cycle, and we're in the 8th year of an expansion. A recent GDP, gross domestic product, print with around 3.2%. A lot of people believe we're in the beginning of a cyclical upswing, which should be beneficial for industrial related stocks, because people maybe bought cars right before the recession, and then let's just make an example, people hold on to their cars for 5 years, so there may be a replacement cycle effect. So all else equal, without knowing anything about the company's financial statements or earnings estimates, where we are in the economic cycle should be good for an industrial company like that, and then go from there. They can't expect you to know. Like what the company's EPS was, like by just giving you a random company. But I think what the spirit of the question is picking a company, first figuring out what they do, relating that back to the economic cycle, where we are in the economy, and then talking about where we are in the economic cycle and how that should be beneficial or not beneficial. That's why I think no matter where you're interviewing, being up to date on current events, the more you can draw from that, the better. I hope that helped.
Great. And then the last question so far is, what's the most valuable thing that you learned at JP Morgan?
The most valuable, I would say, the most valuable thing I've learned, in addition to all the technical skills, the most valuable thing I would say is the importance of having a positive attitude and a network within these firms. And what I mean by that is going with what I said in the beginning of the panel, that you're not going to be expected to be the expert. But a senior colleague of mine has a saying, and it resonated with me. that aptitude plus attitude equals altitude. And he said, hey, everyone that comes in here is going to be smart. If you're not smart, you wouldn't make it through the turnstiles, and you wouldn't be at Johns Hopkins, and you wouldn't be going to the Super Days. One thing, though, if you're fortunate enough to get hired at one of these shops, is what can differentiate you is just being energetic and being enthusiastic and having a positive attitude every day. Just being a member of a team, showing you are a team player that's going to block and tackle every day and do your role, that has helped me build relationships within the firm that I think are invaluable. As you mature at no matter what job you have, your relationships are the most important, and the people you work with and your colleagues. I didn't appreciate this enough coming into undergrad, but just really trying to put yourself out there and connect as a person, not just as a employee, with a lot of your colleagues and teammates, because you never know. You could be sitting next to the CEO 25 years from now. That person that you were with at training could be the person that gets you your next job. You never know who is going to give you your next break. So, but casting a wide, just like casting a wide net for companies is important. Within a company, trying to connect within the company with as many people as possible is also very important.
Great. Next question. What do you find most challenging as an investment specialist?
Oh, man. Well, first of all, being an investment specialist, I'll tell you a little bit more about. I was on the FIG team, the Financial Institutions Group team. So we deal with the bank's most sophisticated clients, Wall Street partners, hedge fund principals, C-suite executives. So dealing with the bank's most sophisticated clients in and of itself is a challenge, because inevitably you're getting on the phone and in-person meeting with very, very successful people that are sophisticated. So there's no hiding. And the point I tried to make earlier about preparation for interviews, preparation matters for when you're going into a client meeting. That was probably the hardest. The second, I would say, is because of the nature of the role, I had to be knowledgeable about all different areas. I may have a conversation one day in a client meeting, and emerging market equities may be the topic of the conversation. That afternoon, I may have to know about bank preferred stock and the nuances between the fixed rate preferreds and the fixed to floating rate preferreds, and how they compare versus other extended credit instruments such as high yield and floating rate debt. And then the next day, I may be talking about U.S. healthcare. So just having to be knowledgeable about so many different areas of the market was a challenge, but I learned so much through that role.
Great. Next question is, I have a super day the night before, I have a dinner the night before my super day. What should I expect here?
Well, I think that's great, because it'll allow you to sort of break the ice with the people that you're going to be interviewed. So many times you see people coming into an interview so nervous and tense. They just want to see how you can interact with people. And investment banking is a people-oriented business. In the junior role, the analyst and associate, everyone gets caught up in the PowerPoint and the Excels, but really, it's a people-oriented business, and they want to see, if we bring this guy or girl to a presentation, can they interact with clients? Can they talk about the economy? Can they talk about stuff unrelated to work without are they going to be a fit? Can we, like they call it the airport test in investment banking. If we were on a flight together on a deal and we missed our flight and I got stuck with this person for 5 hours in the airport, would it be okay, or would I be wanting to pull my hair out of my socket? Just seeing how you are as a person It's one thing to see you on paper. It's another thing to see how you interact as a person. I would just say be yourself, but be as enthusiastic, as courteous, use manners. Obviously don't, you know, you always hear about the person at the company holiday party that drank too much, or don't make a fool out of yourself, but just be who, common sense. Show up early, probably be the last one to leave. Talk with everybody, put yourself out there and trying to associate and connect as a person with everybody, because people are going to want to hire. If you forget one thing from this whole session, people are going to want to hire people who they like and people who they can relate to. It's funny, I'll share a quick anecdote. My first interview I ever took, as I said, I was the captain of the basketball team. I also had a 4.0 GPA, and my first interview, all the guy wanted to do was talk about basketball. And I went home and I talked to my mom and dad. I was like, man, I was all ready to talk about my GPA and Hopkins and how I took 2 majors and was challenging myself. And I was kind of disappointed afterwards. But then I look back and I'm still actually am friends with this colleague now. He talked about basketball the whole time, and I ended up I would have gotten the job had I continued in the process with that company. Use any way you can relate with someone as possible, and try. And if another piece of advice would be, if you know who's interviewing you, a lot of times you don't, look them up ahead of time, whether it be LinkedIn, on Google. Try and figure out what charges their motor. Obviously they go to work, but what is that person, are they on a board? Are they into philanthropy? If you can connect on a personal individual, then maybe ask them a question related to that. Oh, they may go on for 10 minutes about that, and then you are answering questions about discounted cash flow statements and merger models. You've related to someone as a person, and people want to hire people who they like.
Great. Next question is, what type of investments do you think are doing well right now?
Wow. Well, I think it's important to know, some of these are very, very open-ended questions, but I think people should realize how investments have performed over the past year. And in general, no, equity markets have done well, despite being, so let's divide this in between fixed income and equities, and we'll talk about it briefly. Equity markets have done well, and whether it be across the board, emerging markets have probably been the best performance. Emerging markets people may not know this, but in 2015 had a downturn because people worried about commodity prices, what we call current account deficits. But now emerging markets have done really well. European markets and international stocks have also performed significantly well this year. And for a while, U.S. equities have outperformed international stocks, but we may be in the beginning of a reversion to the mean. Despite this, U.S. equities have done well. Some are concerned about valuation being, and the average price to earnings ratio on the S&P is around 17.5 times earnings. We're slightly north of that, but what's allowing stocks to continue to do well is earnings growth, not necessarily multiple expansion, but earnings growth. Earnings are growing faster than they have in the past couple of years, which should be supportive of stock prices. And the fixed income has also done well. Now, you should know that equities, higher risk, higher reward, larger band of fluctuation ranges for where the stocks can go. So stocks should outperform fixed income, but relative to expectations, fixed income has done well. The reason, and when if they ask you about fixed income, there's really 2 main drivers: it's interest rates and credit. So I'll take 30 seconds on each of those. Interest rates in general, when everyone sort of knows the rule that if interest rates go up, prices go down. Why? Because if you have a fixed coupon payment and then market interest rates go up, that coupon now became less competitive to market rates. And credit, credit is determined by a spread, normally over the comparable treasury. And this is a function of the economy. As I said before, earnings are well. So what does that mean? Companies are growing faster than they have in years. They're generating more cash flow. And as a fixed income investor, you're not worried about upside in equities. You're worried about getting paid back. So if companies are generating more cash flow, all else equal, that should improve the likelihood that they'll be able to fulfill their fixed obligations, and therefore the spread that the market requires over a treasury should go down. So what you've seen in fixed income markets this year is interest rates really haven't, inter-year there's been a lot of volatility, but interest rates have not skyrocketed as a lot of people have thought. So that's been positive for fixed income investments. A background, and many of you may or may not be aware, we have been in what's called a bull market for fixed income for the past 30 years. And what I mean by bull market is interest rates have been going down. Now, with what the Federal Reserve is, and everyone I'm sure is familiar with, the quantitative easing has stopped, and now we are in the process of reversing that expansionary monetary policy and of instituting hiking interest rates. They're going into the year, people thought that interest rates would maybe rise faster than expected. We haven't seen a significant bump in interest rates, which has helped fixed income markets. And then the second part is credit metrics have been very stable. So credit spreads have condensed, which has been very supportive for more risky fixed income investments, such as high yield bonds or floating rate debt or preferred stock. So all of fixed income has done well, but the more risky fixed income investments, such as those that I said, have done the most well because of credit spread compression.
Okay, I think we are all done with the questions there. So if there was any other things that you wanted to cover until someone else jumps in with more questions.
Okay, please interrupt me. Yeah, and I think these are all good. Maybe I'll just give some questions just on what you should expect. So we talked about the discounted cash flow for investment banking. I know we have to go. We have about 13 more minutes. Other questions you may see in investment banking are going to be around like the 3 ways to value a company. You should know discounted cash flow, comparable company analysis, and transaction analysis. And your answer should include, I think a good answer explains what each of those are, and then says the advantages and disadvantages of each. Quickly, the advantages of the DCF is that it's a fundamental, more academically sound model, but the disadvantages of a discounted cash flow model are that they're based on a lot of assumptions, and they're very sensitive to terminal value or terminal growth rate or discount rate. And you can change, if you change an assumption by a small amount, it can have a big impact on the value. Whereas the other methods, the comps and transactions, are more market based and are based on willingness to pay and are less theoretical. And you should also know that the transactions method probably normally results in the highest valuation because it includes a control premium. Normally, to buy a company, you have to buy it higher than the price that it's currently worth. Other questions quickly that you should expect: equity research, investment banking, accounting questions. Simple questions like, what are the 3 financial statements and how do they tie together? A brief answer to that would be, 1 minute, I would say. Keep it as the 3 financial statements are the income statement, balance sheet, and statement of cash flows. The income statement takes revenues minus expenses and gets you to net income. A statement of cash flows tries to identify the sources of cash and is broken down into operating, investing, and financing activities, because cash is the blood of the company. And the balance sheet or statement of financial position is a cumulative document that shows what the company owns, its assets, and how it was funded with liabilities and shareholders' equity. and how they relate together is briefly, and they can like there's more ways than this, but I would say simply you take your net income from the income statement, and that becomes the first line of the statement of cash flows, and you try to adjust net income based on certain non-cash expenses, or increases in what's called working capital assets on the balance sheet are cash drags, and decreases in working capital assets are sources of cash. And then assets, purchases of long-term assets on the balance sheet show up in investment activities on the cash flow statement. And your cash from the statement of cash flows goes into the cash on the balance sheet, and your net income from the income statement goes into the shareholders' equity part of the income statement. So even that answer was too long right there. I thought I did a good job in the beginning of saying what they are, but maybe just you're not going to be able to get to everything, and they can ask follow-up questions, but maybe just talk about net income going into shareholders' equity being the first line on the income statement. On the statement of cash flows, and then maybe the working capital line items. And you should know an increase in a working capital asset is a use of cash, and a decrease is a source of cash, and vice versa for liabilities. Another common question, Elena, please interrupt me if people here have follow-ups, are what I call the depreciation question. And it's asked so often in interviews that I think it's worth going over. So the typical question is, if you're given $10 of incremental depreciation expense on the income statement, how does this affect the three financial statements? So no matter what they do, I always go income statement, statement of cash flows, balance sheet, and you want to make sure the balance sheet should balance. So an example to an answer may be, all right, depreciation expense increases $10. That I'm going to assume a 40% tax rate. So this will decrease my net income on the income statement by $6. Net income is the first line on the statement of cash flows. But I'm starting the statement of cash flows down 6, but because depreciation is a non-cash expense, I have to add that back in. So my cash is actually +4. -6 plus 10 is +4. So that cash goes to the balance sheet. So my cash increased by 4. My net income was down 6 in shareholders' equity. And then what's the item that makes it balance? Well, property, plant, and equipment went down by $10 by definition of depreciation. So my right side of the balance sheet is down 6, and my left side is also down 6, down 10 for depreciation, and then up 4 for cash. So always, I hope that was clear, but if there's so many different variations of this, like, a stock-based compensation, but when they give you a question like that, my advice would be, 1, take a deep breath, figure out what is actually happening, and then go income statement, statement of cash flows, and then balance sheet, and make sure your balance sheet balances. I'll pause there to see if anyone has any additional questions.
Nothing's coming in. I did just send one last request for any additional questions.
So those are mainly investment banking. We hit a lot of those are equity research. Real quickly on equity research, there's a lot of overlap, but make sure you know. I think at the MBA associate level, the good rule of thumb for equity research is know 2 stocks that you want to buy or pitch, and 1 that you want to short or sell. So my advice at the end, and I don't know at the undergrad level, but if I was preparing myself for an equity research role, first I would want to know what area they focus on. The more, the better. So like if you have a company that focuses on healthcare, they're probably going to ask you about healthcare. If they focus on dividend-paying stocks, they're probably going to ask you about companies that are more mature. So you wouldn't want to pitch Google or companies like that to a dividend guy. So trying to tailor your pitches to stocks that are in their portfolio. Once you figure out and do your research ahead of time, I would know I would have two long ideas or stocks that I want to pitch for buying and one short idea, one stock that I want to sell, and know those stocks inside and out. Know as much as you can, like how they compare to competitors, what are their margins, what are the returns on invested capital, what do you think the market's missing, what is their position in an industry, what is the CEO, what are their business segments, where do you think the company's going? All that stuff is fair game to be asked.
We got questions that came in also, Tim,
And then quickly for sales and trading, they're going to be similar to the asset management questions that I talked about earlier. Knowing the market. What is your view on the S&P 500? Where do you think the S&P 500 is going to be the next 12 months from now? What's your outlook on the fixed income market? Where would you invest? What countries? Which sectors? What is your view on alternative investments? And then obvious questions such as what is gold at? What is oil at? What is the S&P at? What is the Dow at? What have those returns done in the past 12 months? Where do you think we're going?
Okay. Sorry.
Yeah, go ahead, Elena.
Okay, so there's a few questions that came in. How do you see yourself in 5 to 10 years?
Wow, interesting question. Hopefully, the one thing you'll learn is that things could happen quickly, and sometimes it's when you least expect it. So hopefully I'm going to be where I am today. I would be happy if where I am today, just in maybe a more senior role, but you never know what's going to happen.
Great. Next question. If you pitch a stock for IBD interview, should you just use ratios/analysis, or should you also model the company and walk them through a DCF?
Well, it depends on how much time you have. Just remember, if you have the time to do that, that can only help, because they may be, wow, this guy you're showing by doing so, one, that you have command on the valuation techniques if you were to get hired, but two, motivation, that on your free time you modeled a company. I did not do that. You can get away with ratios. And also it doesn't all have to be quantitative. Some qualitative stuff is important too. Who do they compete with? How do they differentiate themselves? Like a Porter's Five Forces analysis or a SWOT. What is the threat to them? Why do you think the market is overestimating that threat? Stuff like that is just as important as what's the dividend yield, what's the dividend discount model, what's the discount rate, stuff like that.
Great. Next question. How would you answer the question, what expertise can you bring to the team? How do you answer that question?
Well, that's going to be dependent on every single, like my answer is going to be different based on my background from somebody else's answer. But for a question like that, you're going to have to rely on your past experiences. And now, coming from undergrad, you're not going to have a lot of professional experiences. So I would use that as a almost behavioral question that's analogous to, why should we hire you? Or give me an example of a time you're a leader. So it's going to be different based on every person's scenario is going to dictate that question. But think about yourself and what really differentiates you, and maybe give an example, like a time you were a leader or a time where you took on multiple tasks at once. What they want to hear is team player, an example, they want to hear team player, someone who's got grit, determination, can juggle multiple balls, can solve complex problems. Any examples in your history that shows one of those four, I would say is a good experience. and differentiates you, and shows and why you're motivated to join that firm.
Okay, great. If you can stay on, we have a few more that came in.
Sure.
Okay, so could you recommend a division in finance, in a finance company, to a sophomore who just has medium experience in about everything? For example, math, startup background, finance, investment.
Well, like I said to the other sophomore who was on the line, the fact that you're even interviewing as a sophomore, you're well above, and you're not. I wouldn't, you know, say to yourself that, oh, I'm behind as a sophomore. No one as a sophomore has any experience. So don't say very little experience. You're not behind at all. In terms of divisions, that's really up to you and what you're looking to do. I used to do an internal assessment of, you think my best attribute is a people person, then maybe you want to do more asset management, sales, and trading. Do I want to be in the beginning or do I think my best quality to the table that differ? Just like these businesses, what is their competitive advantage? You, I think, have to think about what you want to do, where you want to be, and what is your competitive advantage. Do you want to be more markets-based? Do you want to be modeling on Excel your whole time? Do you want to be meeting with company management teams? Do you want to be all of those questions are going to help, and they're going to be different for everyone, determining which part is the best fit for you.
Great. And two more questions. If there's one thing that you can change at your firm, what would you change?
One thing I could change on what?
At your firm, what would you change?
Oh man, that I'm not sure. I'll have to think it. That's a good one. I'll have to think about that one and get back to you.
Okay. And then last question, how do you answer why should we hire you as opposed to someone else?
And like I said, this is similar to the last question, but I answered that question using my own past experiences. And in college, when I was in your situation, I talked about my diversity of experiences, being a fast learner and switching from pre-med to economics. I talked about my team building skills, being that basketball taught me, and I talked about my ability to juggle multiple balls at once, being a college athlete but still taking, almost effectively having a double major at a top 10 national university, to sell myself to prospective employers that I was not only, I could cut the mustard, but I had an upside. Using a basketball analogy, the NBA draft, people draft not just on current talent, but upside. And I tried to sell myself as a potential, having a lot of potential based on my past experiences. But there's no cookie cutter way to answer that question, but you have to look at your past experiences and what you think you bring to the table. And I think knowing what companies want to hear, they want someone who's dealt with adversity, who's played on teams, who has challenged themselves. It's not just GPA. Yeah, you can get a 4.0 GPA, but were you taking, did you challenge yourself? Did you, with multiple extracurricular activities? People want people. They don't want robots. So that's why the person that asked the question about the dinner the night before, they want to make sure they're hiring a person and getting to know you as a person. So putting yourself out there, multiple extracurricular activities, however you see it, those are sort of what they're looking for in that answer.
Great. Well, that is everything. Thank you so much for your time. Going overboard too. Appreciate that.
No problem. And everyone, if anyone has any follow-up questions, you can reach out to Elaine, and she's got my contact information. I'd be happy to help in any way I can. And really just want to I hope this was helpful, and I want to see people succeed. And anyone that has any questions, please reach out.
And also, everyone, this will be recorded and we will have it posted on the Career Center's YouTube channel. So once that is up, I will send out the link to all the attendees and the registrants for the webinar. So thank you so much for your attendance, and that's it.
Great. Thank you, everyone. Have a good day.
Thanks.